And we're going to begin today with going over the Thinkorswim desktop application. In my opinion, this is the most customizable and professional brokerage app that you can download. I recommend it for all of our private Discord members to get the Thinkorswim app through Charles Schwab. Now, once you load into the broker, you create an account, you sign up, and you log into the application, it will look something like this. Now, your screen, the background will probably be black. You won't see all of the indicators and the tools on the bottom side. And we'll share with you how to edit all of those things in a moment. Now, the first thing that you have to understand is in this box here, what you're viewing in the upper left-hand corner, this is going to be the publicly traded company stock. This is not options, futures, bonds, or anything like that. This is the underlying stock. So when you type in the ticker CVNA, this is Carvana, AAPL, Apple stock, Tesla, TSLA, Google, Amazon, right? Very straightforward stuff. This is the share price for the underlying stock or the public company. Okay, so not to be confused with options, which we're going to show you in a moment. So this is your ticker in your upper left-hand corner. Now, what you want to do is you want to create a watch list based on the names that you're going to feel comfortable trading. And that is where you're going to go on your left-hand side and you're going to click this little box here that's going to expand this window to the left. Now, you're going to see news and clutter and a bunch of things on your screen here that I've already removed. So what you want to do is you want to click these three lines and you want to delete gadget. So delete all of the news, the company profile, all of the stuff that you're going to see until your screen looks like this. Now, once you do that, you're going to want to take the arrow on the bottom left-hand corner and click the plus button right here. Then you're going to want to click watch list. Once you click watch list, a list of companies, let's just say Apple, Google, like a bunch of them are going to pop up on your screen here, which maybe looks something like this here on your left-hand side. What you're going to want to do, let's just say you have a bunch of names like this, Tesla, Meta, right? Just example here. So what you want to do is delete all of them. So click on the name, click delete, hit enter, right? Do that for all of the names until it says this watch list has no symbols. Okay? And what you're going to want to do is figure out what stocks you're going to like to trade. Now, everyone's account is going to be different in terms of the value or the size of the account, and I think that's very important when it comes to actually trading options. Okay, before we get into that, we're going to collapse that window for one moment here, and we want to go to the viewing windows. I think that's really important here, and we're going to click this little window. So you'll see there is this scientific beaker, there's the gear icon, and then you'll have the viewing window right next to it. So we're going to click that. We're going to customize list on the bottom here, and then we're going to add time frames. Now, when we add a time frame, when you see daily, that means every single candle print that you're observing here on your left-hand side is an individual day or 24 hours. Every single individual candle. So this is on a daily, we call this a macro view, a zoomed out view. Now, your time interval, we're going to go on and scroll down to max available, and then we're going to want to add a day, a 2 day, a 4 day, a week, a month, a quarter, and a year. Okay? So do that all individually. Add those names, do it again, add a weekly, add a max, monthly, quarterly, all of those things that we just said. Now, for the purpose of this video, I already did that here. As you can see on my watch list, we already have all of the max viewing windows, so I don't need to do that. That's why I'm sharing it with you. Make your screen look exactly like mine. Once you do that, we're going to want to add time frames and we're going to want to go to intraday. Now, intraday is going to be minutes and hours within a daily range. So intraday means within that day. So you could have multiple different viewing windows as well. In this case, we have the 1 day, 1 minute, the 5 day, 3 minute, 5 day, 5 minute, 15, 30, hourly, 2 hour, 4 hour, right? We have all different ranges varying from very, very micro or the most zoomed in to the most zoomed out or the max viewing window. Now, this is all personal preference. You can mess with the lines and the charts and the time frames over the next few days, weeks, and months. But for me, this is what I like. I think every trader will benefit from having it exactly like mine. And in most situations, I will tell you, don't just blindly copy me. Don't just do exactly what my screen looks like. But in this case, I think it could be very beneficial if you have all of these levels perfectly mapped out for you. Now, what I did to make it easier is I edited them so that they're all in chronological order. So a lot of times you'll see it'll be something like this. You want to make sure that you have it all in order. So the 1 day, 1 minute goes at the top, the daily goes there, weekly, 2 day, right? You want to make sure that it's all in order by the chronological value. Okay, so we have 1 minute, 3 minute, 5 minute, 15, 30, hour, 2 hour, 4 hour, daily, 2 day, 4 day, weekly, monthly, quarterly, yearly. Very simple. That's so we have it in order from the most zoomed in all the way to the most zoomed out. Once you're done, click apply at the bottom of your screen here and then hit OK. Now at this point, your viewing window right here should look like this. Okay. So now when we flip through all of these time frames here, let's just say we click the max yearly, for example. This is Amazon stock. So this goes all the way back to 1997, where it first went public, when the first time it was available for you to buy shares in the company. Okay. So that was about 28, 29 years ago. Now, when we look going all the way back, right, we see each individual bar, each candle is 12 months. So now we get the big picture. We get the real zoomed out view. Wow, imagine if you invested in Amazon, 20, 30 years ago. I mean, that's incredible, right? Now we go on a monthly. Okay. Now we get a little more zoomed in of a view. Still the same thing. Now we go on a 2 day. Now we go on a daily, right? The more you zoom in, the more clear the picture becomes. Now you go on the minute charts. Now you're only seeing a couple days, right? You're only seeing 1, 2, 3, 4, 5 days of price action. So this is only the last week of trading versus the last 25 years of trading that we just showed you. Both charts, both viewing windows matter. You have to understand the big picture before zooming in on smaller time frames. If you don't do that, you're not going to understand relative where the price was a week ago, a month ago, 3 months ago. Where's the high of the year, the low of the year, the all-time low, the all-time high of the stock. It's not to say that you're going to trade off of those levels all the time, but you must know them in the back of your head when making decisions based on the intraday levels. Like we just said, this is a 5 day, 5 minute. You're seeing the entirety of last week's trading all bunched in to 5 minute candle prints. So as you can see, every single print here is now 5 minutes versus what we just showed you 2 minutes ago. It was a year, a month, a day, 4 hours, 1 hour, right? Very straightforward stuff, but you have to start here. That's important. Now, in terms of customizing your screen, you want to now go to the left, which is that gear icon here, and you want to click that. That is your customization tool. Now, you're going to have a bunch of different things that you could tweak. I don't want to tell you exactly to do what I do, right? Everyone is going to have a preference in the way that they view the stock market. So you might like different colors, you might like different aesthetics. It might click or resonate with your brain depending on the way that you think. So I don't want to, again, tell you do it exactly like mine. That doesn't always work for everyone. But for some people, if they copy my chart, it will be very beneficial for them. So again, I'm just going to let you look at the chart here. You could pause the video so you could see all of the boxes that I have checked off and not. Go to price axis here. Okay. I have a certain expansion area, which means that the price is going to stay about 10% off from the top, 10% from the bottom, so that it's in the middle of the range. So it has a little bit of compression. That's why I have the expansion area the way I do. We have it scaled to auto, so we don't have anything fitting the high and low of the chart. It's all in the middle of the range, as I've just shared with you. And then as we move on from this here, we see that we have the time axis, all different things. Expansion area is 1,000 bars to the right. Okay. Again, you could pause this at any time. Then you could also edit your favorite time frames here in this, which we did already. You could add different ones, move it up, move it down, or you could just again drag it up and down so it fits again in chronological order. Now, the appearance is the big one here. This is what everyone talks about when everyone's trying to say, how do you get your screen to look like this? Why is it different? Well, very simple. Look at the background. This is what most people's charts are going to look like, right? If we look at the candle trend, this is how your chart is going to look. Most likely, again, if you sign on to the broker and you haven't edited anything, this will most likely be your view. You'll have hollow candlesticks and your background will be black. All it takes is one click of a button. Just change it to blue, change it to whatever color you want. Some people like white. Some people like to have this type of candle. Some people like to have the bars like that. It's all preference, right? So mess around with them. All of these colors, the border up, border down. You could have the fills on the candle wicks. If you don't want the candle wicks, you don't have to. You could do a line graph. You could do an area graph. There's no right or wrong answer here. It's whatever clicks in your brain. Some people are going to look at this and say, that looks ugly. I don't like the white. It just, I hate the way it views. Some people will go and they'll click the black and they'll say, wow, that looks awesome. Super clean, much more visually appealing to me. I like this. So whatever you want to do, click apply, click OK, and it will change that background instantly. Okay, for the sake of this video, I'm not going to change it. And then you also have your cursor here, which you could have a different sort of line. You could have a different color cursor. So when you're actually looking, you could see how I kind of have crosshairs going left and right, and mine is gray. You could edit that as well. Now, there's different things for equities, options, futures, forex, crypto. I don't use any of the other settings here. So again, you could just take a look at how I have mine if you want to copy them, but I haven't changed them or tweaked them, so I don't really look at that as a huge deal. So that is the basics so far. What I think is essential now going into building the watch list here. Now we're going to go to our left-hand side. We're going to click that window. It's going to expand it again. Now we want to build the watch list, right? How do we know what stocks are going to be the best ones for us to trade? Well, you're going to have to figure out the value or the premium of the option contract. So how do you find the options? We have to go into the upper left-hand window and click trade. So let's go to Amazon here. We're going to click trade, and then we're going to see something that maybe looks like this. So you want to make sure that you go to the option chain here. As you could see, options chain. You want to make sure that that arrow is pointing down so you see all of the dates here. Now, a lot of people, they don't understand what options chain is. All an options chain is essentially betting on a certain price, whether the price is going to go up or down. It has a specific value, and then it has a date or time attached to it. So as you can see here, you can bet that the price is going to go up to a certain dollar amount or down to a certain dollar amount, and then there is a time frame attached to it. As you could see here, when I go to April 20th, you're betting for the end of day Monday. So it'd be 1 day until last trading day. April 22nd, 3 days. May 1st, 12 days. June 18th, 60 days until the last trading. January 2027, 271 days. Right? So you can get a list from the most narrow or the shortest time frame to the most zoomed out time frame. Same way how we just showed you with the viewing windows. Same thing applies with options. You can buy for expiration on Monday, or you can buy for literally December of 2028, 1,000 days out. Okay? So now the only thing that you need to know is the more time that you buy, the more expensive the contract is going to be. And that should be pretty straightforward. Now let's go to Monday, for example. Well, hold on. I don't see the same thing that you see. There's going to be two reasons for that. One is that you want to make sure that you click right here, which is going to show you the volume and open interest. Your screen probably will say last and net change. Go down to volume and open interest. Click that. The second thing you want to do is go to the strikes, and you want to make sure that you have all of the strikes enabled. For most people, their chart maybe looks something like that. They only have 8, they only have 6, whatever the standard of the broker is. Click the strikes, go to all so that you see every single strike on the entire chain. Okay? If you didn't know, this is the option chain, as we just mentioned. The strikes is the dollar amount that you're betting. It could be a dollar amount going lower, it could be a dollar amount going above the current price, or it could be at the money, which is relatively the same price. Doesn't matter. Okay? So now again, going back to what we just said, let's say you want to bet for $260 up by Monday. It only cost you 11 cents. Okay, so the bid here, people are buying for 11, they're selling for 12. So when you think of option contracts, again, this is not to be confused with the share price or the stock. These are times 100. So if you see 10 cents, it's $10. If you see $1, it's $100. If you see 24, $25, it's $2,500 per contract. So anything you see is times 100. One penny is $1, $1 is 100, $10 is 1,000, and so forth. Now, let's talk about the time, right? We look at a 260 call expiring Monday. That means by the time the bell rings at 9:30, you only have about 6 to 8 hours to make that bet be right. Now we go all the way down, let's say to June here. Now we're giving us 60 days versus 6 hours. Now let's go to the 260 call. A 260 call is $10, right? Because you're buying 60 days worth of time. In 60 days, do you think Amazon has a better chance of moving up from 250 and a half to 260? Absolutely. Absolutely. It's infinitely less risky than buying the contract for expiration on Monday. You have 60 days versus 6 hours on Monday. So that's why the contract is more expensive. Greater probability of being successful. And that's on both sides. That's if the stock goes down to 240. That's if the stock falls down 10 or if it goes up 10. Okay. Now let's show you again. Let's go all the way to January 2027, 270 days. A $260 call is now $29, right? Almost $3,000 a contract. The 240, same thing on the put side. If you want to bet $10 down, $10 up, it's about $2,000 a contract. Again, because you have 271 days to be right now. It's infinitely less risky, way more probable of you being right. So you have to pay the premium for that. So again, these are very basics, simple things in the option chain, but essential for every single person to know. Now let's just go back to April 20th here. Now, when we look at the chain, you're going to say, well, why is it purple here? Why is it this box like that? Doesn't really make any sense. The purple box is what we call in the money. The acronym would be ITM, in the money. Now, what is in the money? It means all of the calls that you bet are in the money here. So, pretty much the price closed at $250. If you bet that it was going to be 240 or above, you're right. If you bet it's going to be 245, 230, 220, all of these bets on the call side here, again, this is important to know. We have calls on our left side, puts on our right side. Calls is betting that the price is going to go above the price that we're betting here. Puts are betting that it's going to go below the price that we're betting here. So anyone that bet on the call side, again, the calls for the price to go above 240, 250, 230 are correct. Anyone that has bet that the price is going to go below 280, 270, 260 on the put side would be correct. As you could see, the values are more expensive on the bottom. It's in the money on the right side, in the money on the left side here. So hopefully that made sense. Now we also have what we call at the money. So this would be the first strike before going in the money. So as you could see, the 250 is correct by 50 cents. If you were to bet the first strike out of the money, it'd be 252 and a half. Okay. On the put side, if you were to bet that the price is going to go below $250, then the 250 would be right at the money for the put. Okay? It's just the simple thing that you need to know. At the money, ATM, in the money, ITM, out of the money, OTM. Very simple. Now, let's say this is for Monday, April 20th, right? You have one day. All of the calls here, let's just say the price closes exactly where it is now. Same exact close on Friday is Monday. Every single option contract that is $250 and greater in value, which again is betting on the call side, you're betting that it's going to go higher than 250, will expire worthless. Every single one. Because you bet by close of Friday that the price was going to be above 252 and a half, and it closed 250. So you were wrong. All of these values keep going further and further and further and further away from where the price closed at. So all of these will expire zero. Every single one of these will be worthless here by the end of the trading session. And then same thing here, right? If you bet that the price on the put side, you're betting it's going to go below 250, and every single strike here did not close below 250, then all of these are going to be worthless. Okay? So in this case, you're betting that the price is going to be below 245. It closed $5 above 245. Same thing, you bet it was going to be below 240. It closed 10 points above. So all of these will expire zero as well. Okay? That is all you need to know on the call side versus the put side. Again, just to say it one more time, if you're betting on the calls, which is your left-hand side, you're betting it is going to be at or above the strike price here. If you're on the put side, you're betting it's going to be at or below the price that you're betting here. Very simple, very straightforward there on the options chain. Hope that made sense. Okay? Besides that, there's really not much you need to know for the option chain. If you want, you can collapse all these windows here. Then you can go to the bottom left-hand corner, which is today's option statistics. You can click that, drop the window down, and you will see the volume or the total amount of contracts that were purchased today. You could see for Amazon, it was about a million contracts, 654,000 calls to 296,000 puts, roughly a 2x here, 2x the amount of calls or people betting that the price is going to go up versus the amount of people betting that it's going to go down. Okay, and then you could see the statistics, where it was traded in between the market, at the market, things like that. But we don't need to confuse that at this moment. Okay, so now when we actually go to build a watch list here, right? A lot of people are saying, well, okay, well, how do I know now if this is what I want to trade? Well, what I would say is you'd want to make sure that you click a weekly contract, right? You can trade one day, which is Monday. You could trade Wednesday. I like to say for new traders, it's better when the stock market opens on Monday to give yourself a week. So bet for Friday expiration. So that would be April 24th. Now, when we scroll down, we want to make sure we do the same thing for every other stock that we talk about here. Now, when we look at the actual contract itself, we're going to want to just assume that we're going to bet somewhere at the money or a little bit out of the money. So, how do we pick the contract first before we actually go into the value? So, we're going to go back to our charts here, and you're going to notice that there's a line at the bottom of my screen here, and it's called the ATR. This is your average true range. And again, for everyone that's looking at this video, you most likely do not have this added to your chart. So what we're going to do is now that we're back on the charts here, as you can see in the upper right hand corner, we went from trade to now charts. We go back to the chart, we make sure we have Amazon or whatever ticker typed in, and we want to make sure that we go next to this gear icon, which is the scientific beaker, and it's going to say add studies. So we're going to want to click that. We're going to want to go into the studies tab, type ATR, double click it, add it to your screen. Make sure that it is on the lower part of the screen. That's important here. If it's on the volume, if it's on the price, all you do is take the arrow and push it down, right? If it's up here in the volume, just click the arrow down. Now it'll pop up in the lower. Hit apply, hit OK, and then you will see your chart will look something like this here with the ATR on the bottom. Now, this is the most important thing. You have to go on the daily. Remember, we want to know every single day what the stock is going to move on average. And that's what it's going to tell us. The ATR is the average true range of the past 14 days. So this is telling us a rough estimate on average what the share price can go up or down in one trading day, one full day. And on average, Amazon moves about $6.53 per day. So when we look here, we could see very clearly Amazon 659. So you could pretty much say in your head between $6 to $7 a day. Whatever makes sense to you. If you want to be more conservative, call it $6 a day. If you want to be more aggressive, you can call it 7. 6, 7, whatever makes sense to you. Okay? Now we're going to go back to the options chain. Now we're going to again click trade. Make sure you go back to the options. Same windows open, April 24th, which is 5 days until the last trading. We're giving ourselves a full week of trading, Monday through Friday, not one day, not 2 days, not 50 days, right? We want to make sure just for the week. And now we're going to look at the money. It's not in the money, it's not in the purple, right? It's right at the money. So if you were to buy a put at the money would be $250 strike. If you were to buy a call, it would be 252 and a half. Almost the same. Now, the values are pretty much identical, right? As you could see here across the board, the value of the call contract is around $3.15. The 250 put is around 350, almost identical, which means one contract is roughly to $350. Okay, very straightforward. So now that's going to determine, based off of your account size, whether or not that is a good name to trade. Okay. So you might say, "Oh, I have $10,000 in my account. I could afford to buy one contract for 300." Someone might have 500 in their account or $600 and say, "You know what? That's 60 or 50% of my portfolio in one contract. That's too expensive." Okay? So very important. Now, when we take a look at the ATR, we just noticed that it's somewhere between $6 to $7. So now, if we multiply that by 5 days, that's anywhere between 30 points a week. Now, a lot of people, they're going to say, okay, well, it can move up 6 or 7 a day. If it moves up that times 5 days a week, it could be around 30. So I can bet 280 up or 230 down, 220 down. And I don't really like that because, again, you're assuming that every single day is going to go up to the max threshold. I don't like that. So I like to be conservative. I like to cut this in half and call it 15. Again, if I lost anyone here, very simple. ATR, we just said, was around $6 a day for Amazon, right? There's 5 days in the week. So that would be somewhere around 30. You don't want to bet up 30 in a week because the odds of Amazon moving up 5 days in a row, 6 points on average, is very low. Okay, highly unlikely that happens. If you get lucky, that's a different story, but we don't want to bet or take positions based off of luck or chance. Same thing applies on the downside. The odds of Amazon falling 5, 6 points on average for 5 days in a row in one week, very, very low chance. Okay, so I take that 30, which is the max threshold based off of the ATR, and I cut that in half to around 15. Okay. So now if we're at 250 here, we'd be at around 235 down, we'd be about 265 up. So if we're going to bet puts, 235 is the max strike that I want to bet down. If we're going to bet up, 265 is the max strike that I want to bet on the call side. Now let's go back to the options chain here. So now with that information, right, let's go and look at what the value of those contracts are. Okay, so 265 right here is 40 cents. 235 is around 40 cents as well. Okay. So if you wanted to, this is the cheapest, again, the max that I would go. And I personally don't like to do the max or the highest risk, right? It's around 40 cents or 40 bucks a contract. If this is too expensive for you, you can't trade options. It's that simple. This is the cheapest any option's going to get, in my opinion. Okay. 40 bucks, very, very cheap. Also, very probable that the move could happen in your favor, both up or down. Now, 40 cents, in my opinion, is a little low. I don't really like that because let's just say you only take one side, for example. Let's say you just buy the 265 call, and then we open up on Monday and the price goes down 5. Well, now your 40-cent contract is going to go down to about 20 cents. So a lot of you are saying, well, how do you calculate that? Well, let's just say, for example, you're buying a 265 strike and the price is 250. Now the share price goes from 250 to 245. That means that your option contract just dropped 5 strikes. Now it didn't go down one, two, three, four, five. It just went down $5 from 265 to the value of what it would be 270. So that means your 40-cent contract here would go down to about 20 cents. So you lose about 50% of your value. Okay? So that's a little steep. I don't like that. Then it's hard to come back. Now you just lost 5 points. Now you only have 4 days left. Now it's, really far away from the money. Now you're, 265 is 20 points away from just being at the money, right? So it's just things that you want to be mindful of. I rather sit there and look at two metrics that I think are going to be really important, and that is going to be your volume and your open interest. So what do I notice right off the bat? The highest volume is right here, right at the 260 strike. The second highest volume is right here at the 255 strike. So right away, these two are the most appealing to me. The most amount of people are buying. There's the most amount of money or liquidity flowing into those contracts, which means people are betting aggressively that the 255 and 260 strike are going to be the most appealing numbers for the call side this week. So pretty much when you look at the value, it all depends on whether you're going to be more conservative or not. When you look at the 260 strike, it's only 10 points away. Really, if you want to be technical, it's only $9.50 away. We have 5 trading days in the week, and we know that Amazon moves about 6 to 7 points a day. So that 260, 255 number is highly probable, highly realistic that it can go in your favor if Amazon has one good trading day. Let's say Monday it has a really good green day and it starts to break out. These can go right into the money very fast. If it has 2, 3 days in a row, these would be perfect. Okay? So 90, 95 cents, somewhere in that range, if you want to get closer to the money, or again, only 4.5 points at the 255 strike, then again, it's a little bit more pricey. But overall, really good volume or good buying on the contract. I like these a lot better. And my personal favorite here, contract wise, in terms of what's fair, what's realistic, what's a little bit risky but not too risky, would be the 260 strike. You're only paying 95 by 99 cents. It's a dollar, it's $100. You're not risking that much money. A dollar could easily go to 4 if it moves up around 8, 9 points. So I really like that. So you have the ability to do a 250, 200% on your contract. You're only risking a dollar. You're not risking three, $400 on one contract. It's a good balance overall on the call side. And again, the highest volume on the chain, the highest open interest on the chain. Very straightforward. Now, on the put side, we do the same exact thing, volume and open interest. We're going to take a peek, and I'm noticing right away here that the 245 puts are the most liquid. Now, I would say those are probably my personal favorite. Yes, you can go and look at the 240s. That's fine as well if you want something cheaper, 80, 85 cents. You have almost 4,000 volume on 1,700 open interest. And then when you look at the 245, you have 4,400 volume on 2,700 open interest. So obviously a lot more call buying as we just shared with you below here. Obviously, right, 650,000 calls to 290,000 puts on Friday. That's pretty straightforward. But again, some people will sit there and say to me, well, hey, why not take a look at something that's a little more closer, right? And I think that's fine if you want to be more conservative. If you want to do something like a 250 because it's pretty much right at the money, but you're going to pay a way higher premium. You're going to pay $3. You're risking 300. What if you're wrong? What if it expires worthless at the end of the week? Now you burn almost $400 versus if you take a little bit more aggressive of a move, but again, it's not too aggressive, right? Something like a 245, a 240, you're only risking around 80 cents to a dollar. So it's much less risky, but still a very highly probable chance of it being successful. Now, some people will sit there and say, well, I looked at the open interest and I saw 10,000 here, and that's the most. So why wouldn't I just click that? Well, again, yes, it is the most, but you're betting that in one week it's going to go to $230. The odds of the stock dropping 20 in one week, you'd have to pretty much have Monday, Tuesday, Wednesday of the stock just go straight down with no bounce, no green action. It's a very low probability of that happening. That's why it's so cheap. It's only priced at around $18 a contract versus 180 because this is a low chance, a low probability, a very high risk option contract. Okay? So the more risky something is, the less probability of it happening, the cheaper it's going to be. Okay? Very straightforward there. This is how you pick option contracts. This is how you pick what stocks you are going to trade. So now let's say that Amazon, somewhere in this range, is affordable for you. Now you can add that to your list. AMZN. Let's do the same thing for Tesla. Okay? So you're seeing the same thing. Nothing changed, still the same strike. The only difference is going to be the price because obviously Tesla has a different price than Amazon and every other stock in the market. So same concept applies. Now the one thing that some people are going to notice is, oh wow, $12 at the money. That's $1,200 a contract. That's very expensive. Well, we have to do the same thing. So the ATR on Tesla is 15. That's huge. That's almost three times what Amazon is. Okay, so Tesla moves 15 a day, up or down. On a good day, it could go above that. It could be 20 up, 20 down. But we're just going to use 15, 16. So that'd be roughly about, call it 70 a week. All right, so now we're going to cut that in half. We're going to call that 35. Okay, so the max that I'd ever want to bet on Tesla would be about 35 up or down. Okay, so now when we go to the options chain again, where we're at, so let's say we call it 435 and we could do 375. So this is 435 up, 375 down. Very straightforward. Okay, so let's just see hypothetically where the share price would be. 375 down on the weekly is there. 435 is right here. Okay, so pretty even, about $3 a contract. Not bad. Definitely not bad at all. So again, if Amazon was fine for you, you could add this as well. If it's a little too expensive for you, no problem. You don't have to add it. If you look at something that's a little bit more conservative, where again, if we use the same metrics that I used before with the volume and the open interest, you'd ideally want to look at something like this here, the 410 strike, also the 420 strike, and then again here the 430 strike. A lot of volume, a lot of open interest on both of them. And again, good volume just in general on this entire chain, but you have different variations in price. $9 because again, Tesla moves 15 a day, you're only betting 10 up. So again, you're betting with a week's time, not even the max threshold of 1 day. Obviously, these are going to be expensive because it's highly probable if you bet 410 or 390 that you're going to be right in one direction. 10 up or 10 down for Tesla in 1 day is less than average. Okay? So be mindful of that. At this point, you should already know how to do this. I've already made it very clear on what I look for. It's very simple, very basic. You want to just look at where people are buying. Now, again, what you don't want to do is you don't want to get too far detached. You're going to look at some of this one day and say, well, there's 11,000 all the way here and this one's super cheap. Why wouldn't I buy a 450? Well, again, you're betting within 5 days' time that Tesla's going to rip up 15 points for pretty much 4 or 5 days straight with no turbulence to the downside. I don't know if that's going to happen. That's very tough for that to happen. Now, it doesn't mean you can't take a lotto ticket. You can't expect to lose your money here and Tesla moves up 15 or 20 and then you have a nice move where it goes, maybe to 3, $4 and you double your money. That's possible. But to expect this 450 to go in the money, to expect this price to go where it is there, I don't think that's very smart. If you want to trade the 450s there and you think Tesla's moving, you think it has a 10, 15 point move in it, then sure. Because if that's the case, if 450 has a 10 to 15 point move, then it's possible that it can go up to 440 or the value of the 435s, which is somewhere between 250 and $3, which in that case would be almost close to around doubling your money. So it all depends on how you view the option contract. If you want to trade it, if you're looking for a 1 day move just to go in and out, then that's different. But if you want to actually hold these, you have to be very careful that if the market goes against you, you're already 50 points away and you only have 5 days to be right. Okay, we know Tesla only moves 15 a day on average. Okay, and you saw on Friday it was only up 11, right? So it doesn't even have to go to 15. It could be anywhere between 10 to 20 a day. And the average is 15. So be mindful of that, okay? Could be a slow week, could be a fast week, depending on the news and everything else. So just be mindful when actually picking the contracts. Now I'm going to do one intentionally that's very expensive. That's Eli Lilly here. And as you can see at the money, these are $1,800. Very expensive. But Lilly moves very aggressive, right? Lilly's ATR is 28 points, right? So on a good day, it can move 30. So anywhere between, again, 20 and 35 is on average that Lilly moves. So it's very aggressive. That's why the options are priced so high to the money because again, you can buy a 950, you could buy a 960, and in 1 day these can double. These $4 or $5 contracts can go to 15, 16 if it has a really good day. As you can see on Friday, Lilly was up 23. That's an average day for it. Okay? Another one, CVNA, Carvana, very expensive, right? As you go all the way down, 1400 at the money. Meta is another one, very expensive, 1200, right? SanDisk, SNDK, another one very expensive here at the money, right? $48 a contract, super, super expensive, right? So this is almost $5,000 for one contract. We would never buy this because again, we don't want to risk 5,000. We have no problem if we bet a dollar, we risk 100 bucks. That's no problem. A dollar to make five, a dollar to make 10, possibly, no problem. But you're not going to risk 5,000 to make 1,000 or two. That doesn't make any sense. So way too much risk here. We would not trade SanDisk. I wouldn't recommend anybody really trading this. Okay? So you have to find what works best for you. I find that prices like Apple, for example, are really, really good for the consumer. So when you look at Apple, same thing. It's just like Amazon. It moves six up and down. I would think somewhere in that 280 range would be a good value, maybe 275. And they're very well priced, super cheap, right at the money. Only has to move five. You have 5 days to be right. It's only $1.50. So I'd add Apple to that list. If you go to Google here, Google, another one very well priced, right? Very cheap, right? You can go maybe 10 points down, 340, less than 10 points, to $1 if you want to get a little risky. Google would be another good one for new accounts, right? So you got to go through all the stocks and figure out what works best for you. Doesn't matter if you're betting up or down. We told you calls or puts, the same exact thing applies. The premiums or the value of the contract is nearly identical at the money on both sides. Okay? The last thing that I would tell you, which I think is really important for trading specifically, is making sure that you have multiple viewing windows. So you go back to the chart, we go off of the option chain, back to the chart, and we're going to look in the top right hand corner and you're going to see that box. You're going to click that box and you can either do two or three windows depending on your preference. I'm going to click three just for the sake of this video here. It's going to look something like this. You could adjust them here, as you could see, right, to make it a little bit more off to the side so it doesn't completely take over your entire chart. And now what we're going to do is we're going to go back to the options chain. So we're going to click trade. We're going to go back to trade. And we're going to want to copy both of the contracts that we're going to focus on. So let's just say, for Google's sake, it moves, how much does it move a day? Google moves about 8 a day. Okay. So let's just say we're going to go to a 350 call, which would be up about 8.5 points. We're going to right click on the 350 call, copy it, go back to our chart, go at one of the windows here, Control V, which is paste, hit enter. And now we're going to get rid of the chart, click the chart so it goes blank, click the active trader. So now you see something like this. Go back to the options chain. Now do the same thing on the opposite side. So we're going to go, let's do maybe a 330 put. We're going to right click, copy the 330 put, go back to the chart, go into the second window, Control V, hit enter, get rid of the chart, click the active trader. Okay, so again, get rid of the chart, click the active trader. Get rid of the chart here, click the active trader. Very straightforward. Now your chart should look something exactly like this. You have the stock here. Here's Google shares, stock price of the company, 340. And now you have the two contracts, both on opposite ends of the trade. Betting 350 up, betting 330 down. Okay? So here you'll be able to trade in and out of the contract with speed. At one click of a button, you can buy and you could sell. And you'll see all of the orders that'll be placed in real time. And this is better doing it live because you could see when everything is moving and fluctuating. You can click the times and sales and see all the orders that are being processed. But this is important for you to have because it's going to share with you how the call contracts are going to move when the price is going up, when it's going down, and then the same thing on both sides. This is comparing and contrasting. This is showing you, okay, the price is moving up. Are the calls moving up very aggressively? Are a lot of people buying them? Because there will be discrepancies in the price and versus the contract. And again, that'll be for a separate video, but I really want you guys to make sure that you click this little window here, which will show the buttons area, and it's going to go over all of your presets here. So you can buy one contract, 3, 5, 10, 20. You can click that gear icon and you can customize all of the orders that you want. Okay, so if you want one contract, 2, 3, 4, right, whatever you want. You could start very slow. You could do more aggressive depending on your account size. That's completely fine. Now, when you go to click an order here, let's just say we're going to do one. When you click buy here, I think it's a lot better, in my opinion, just having the window up than having to go to the options chain, right? It's going to be collapsed. You have to then find the option. You have to scroll all the way down. You're going to have to find it. Okay, 350. You have to click buy. A lot of times, some people will accidentally hit the bid. They'll click the buy and they'll sell the option short. You don't want to do that. On accident, you could hit the bid and sell the option. And that makes people panic because they don't know what they did wrong. So you have to make sure you hit the ask on the right hand side. Hit the ask here, and then it turns green. So see when I hit the bid, it goes red to sell it, -1. And then when I click the ask, it goes green, +1 to buy. See how you see the side flip? You go to sell side. A lot of people aren't paying attention to that when they buy options. They have no idea. Sell, see, sell, buy. Sell, buy. So a lot of times people don't realize that they rush. They go there, oh, it's 350, it's 240. Oh, let me click 240, confirm, and then they actually sell the option short, which is not good. Okay, and we'll talk about that again in another video. So to again have to reduce this risk and also the time factor that's going to be involved in it, which again would be actually having to click it, adjust the order 3, 4, 5, 6. Oh, now the price is going up on. I have to adjust the price, confirm, send. By the time I do all that, the market's already moving away. It's moving up, it's moving down. I'm either overpaying or now the market's running away from me. Now I have to now cancel the order, go back. I have to now adjust the price, right? As it's going higher. It just takes way too long. So now we have it all here. One click of a button, boom, send. And what we could do is we can click the auto send. Okay? So that means that one click of a button will fill the order. So instead of having to do all those things, buy, confirm, send, you're already just auto sending it. So you don't have to confirm. This is obviously a much more risky thing to do. But now when the stock is moving, let's say we're on a 5 minute chart and we're watching it trade throughout the day, and we want to buy, all we have to do, one click of a button, you're going to hear a loud, sort of error alert here in a moment. Because again, we're not in the open market. But one click of a button, you buy, and then it instantly will fill your order. Or if you want to sell, right? Same thing. You can now click buy. Let's say you bought for 250 and now you want to place a limit order to sell. Boom, you could sell right there at 280 and you'll see on the screen exactly where the value of the price is, right? So 240 if you want to buy a $350 call for $2.40, the price would have to come down to $340.40. So the stock price would have to fall about $2. If you want to sell it at 280, the price would have to be around $342. So you could already have your order set to sell. You could already have your bids placed if the stock drops. You could have it ready to fill your order. It's very fast. As you can see, the auto send, one click of a button, you buy, you sell, done. If I take the auto send off, you have to click buy. You still have to edit it. You have to adjust it. You have to do that. So it's a pain, right? It's annoying. It takes time. And the market moves very fast, right? Minutes and seconds are everything. So I find that this helps tremendously because you could be in calls, you could sell the calls quick, you could say, you know what? I was wrong. I don't like the way the calls look anymore. Now, instead of having to go all the way back and do the puts, now you already have the puts on your right hand side. So, okay, the calls aren't working, no problem. We get rid of the calls. Now we're focused on the puts and vice versa. So it's good to have both sides there so you could see how many people are buying calls, how many people are buying puts. In real time, you can compare and contrast how the price of those contracts are moving relative to the stock price or what we call the underlying share value, right? And that's important because you could play both sides. You could buy and sell the calls. Okay, now I don't like the calls. Now the stock is turning around. It's reversing. It's coming lower. The market's selling off. We have bad news. Now I have the puts right here ready to rock. Boom. Okay, if you don't like that, no problem. Just click the upper right hand corner, go to two windows, then you can just keep the calls if you want to do that, no problem. So that is trading in a nutshell there on Think or Swim platform. I hope it helped. The last thing that I'll say here is if you want to just get rid of this, right, without actually closing it out, you just right click on the actual chart itself and you click maximize sell and then it'll pop off. Okay, and if you want to bring it back, right click, restore cells, and it's right there. Okay. So now again, you can mess with all this stuff as I just mentioned before. You can click the scientific beaker. You can do stuff like the VWAP. You could add the VWAP. You could use the EMA, the moving averages, the SMA, simple moving average. You could do all of those things, right? I don't have any of that on my chart, so I'm not going to share with you stuff that I don't use. A lot of people like the MACD, the RSI, the Bollinger Bands, moving averages, all of that good stuff. To me personally, I don't use it. The only thing I have on the bottom is the volume, right? I just want to look at the actual volume intraday. And then I have the ATR, which we use for pricing the contracts, picking the right value. Okay. So again, I hope that that helped. This is an introduction to the Think or Swim platform. This is the desktop application. I recommend all of the Discord members to download and create an account here through Charles Schwab. This is not only the most customizable, but the most professional brokerage app in my personal opinion. So again, if this video has been helpful to you, please smash that like button. Let me know in the comment section below what you're struggling with, what you want to see more content in the future. Before we wrap this video up, I want to point your attention to our website, avidcapital.co/discord, where we go live most days throughout the week on the mic. We trade, we share our perspective, stock setups and opportunities. We do options, futures, all of the above, and we really help you navigate this extremely turbulent period in the market. Does not matter what's happening on the macro view. If SPX is down 100, up 100, we're able to find opportunities every single week and help you guys navigate this very, very tough market. I would say in the past 6 years, this is the toughest market to trade without a doubt. The whip action, the chop is just absolutely incredible. And again, a lot of traders are getting hurt badly. So if you're looking to get back on track, if you're a new beginner, head to our website, avidcapital.co/discord. It takes about 60 seconds to sign up. We'd love to have you and share with you our opinion, our analysis, and how we could stay one step ahead of the competition. Besides that, guys, have a fantastic night. And as always, we'll see you in the next one.